All right, hey guys, welcome back to the next session. I can see some of you guys are joining. I think first of all, thank you so much for coming and joining us for the following sessions. We have about three sessions left. So one with Binny next, and then one with Terrence, and then one with Roger. This is of course the Market Insights Virtual Summit, hosted by MarketWise Asia. We also have Alex from MarketWise. Alex, you want to say hi?
Hello, good afternoon, ladies and gentlemen. I hope you guys had your lunch already, but I haven't. Yeah.
Next time for you get lunch soon, don't starve yourself. But I hope you guys have gotten your snacks or whatever. It's about 1 p.m. now, so just after lunch. Very good for food coma. So I hope you guys got your coffee as well, so you don't fall asleep when you stay with us. But yeah, so let me just go ahead and share some information about the event and some announcements, and then we can get right into it with Binny's session upcoming. Okay. Right. Let me see. There you go. Alex, can you see my screen?
Yep.
Okay, perfect. So, guys, this is the Market Insights Virtual Summit. So, thank you so much for coming in. If you have been with us from the start since yesterday, first session, I want to give you a big pat on the back. Thank you so much for being with us for all the sessions. But even if you're joining us right now, no problem at all. I want to welcome you to our session happening today, and also we were live yesterday as well. And there are a lot of exciting things that we've been talking about, a lot of different sessions, and we still have three more sessions to go. Of course, this is proudly organized by MarketWise Asia, and we also would like to thank some of our media partners, BK Forex, Swim Trading, Systematics Trader, as well as Terra Seeds. Okay, so next up, if you want to stay in touch with us and hear all about the upcoming events and the various kind of things that we're constantly talking about, and also just be part of the community, I would encourage you guys to join our Facebook and Telegram channels. You can see on the screen right now, or if not, in the chat group as well on the Zoom, you'll be able to see some of the links that Alex will send. And all you need to do is click on it and join those channels, because that's where we're actually sharing all of the information about our upcoming events. Okay, so next up, we have an exclusive promotion for all of our members or anyone that's tuning in right now. And because IG is one of our proud sponsors, we are working together with them to have a promotion. All you need to do to get a $100 credit is open a new account with IG and fund at least $500 into the account, and also make sure that you execute at least one trade within 30 days. And you will actually get your $100 credit. And this is eligible for anyone that has a Singapore residential address. So just make sure that you're eligible. And you also get on top of that, the Trader's Blueprint, which is a very interesting book. And the last thing I want to talk about before we get started is our upcoming event. So our next Market Insights Virtual Summit is happening on the 10th and the 11th of July. We will be inviting speakers Tom Basso from Trendstat Capital Management, as well as Michael Covell from trendfollowing.com, and they will be joining us and sharing about the trend following mindset. Now, I highly encourage you guys to join this upcoming event. In the chat in Zoom right now, you'll also be able to see the link to join and register for this next event. I promise you, you will not regret this upcoming one. Okay, so with that, that's all of the announcements that I have, and let's get started into our next session. So the next session is going to be a speaker who has a lot of experience, over 15 years of experience in providing trading education to both institutional and retail clients. Now, she's none other than Binni Ong. She does invest and trade in a wide array of different instruments, equities, forex, commodities, what have you. She does that. And she also has a master of business and has strong training in quantitative and statistical skills. So her interest is really in quantitative trading methods. In today's particular session, she will be talking about the alien wash strategy to stop your trading frustration. So I'm sure you guys want to find out more about that. I'm not sure if you've ever had trading frustration. I know I have. So I definitely want to listen to Binni. So Binni, let's invite her to join us right now. Binni, can you hear us?
Hi, Jeremiah. Yes, I can hear you.
Perfect.
Can you hear me?
Yes, I can hear you too as well. Very nice to see you, and also very nice to see the background that you have. All your paper articles are in your background. It's very cool. But I'm very happy for you to be here with us. And I think we're all going to be interested in finding out what you have to share. So with that, I'm going to pass the time over to you, and I'm excited to hear from your session.
All right, thanks, Jeremiah. Thanks a lot for joining the session. How are you guys? And nice for the invitation. Let me just share my screen. All right, I think you should be able to see my screen right now. And a few things, if you do have any questions, please let me know in the chat box. I'll try to answer as much as I can, because today's session will be a little bit more interactive than to just hear me on presentation. So I need a little bit of interaction from you guys, because I'm sure that you have trading frustrations, right? Do you have? I mean, if you don't have, then you're really very lucky. And thanks, and I can see some familiar names. All right, now let's get started. Before I start, so let's take a look at the disclaimer, just a few seconds, all right? So today's presentation is not, it's just purely educational. Yeah, a long time I haven't seen some of you, but I've been talking quite a lot. All right, but I went into a bit of a retirement, semi-retirement for a few years. That's why you haven't seen me for a long time. Did I change a lot? All right, now, just a bit of introduction for those who didn't know about me. So I've been training for really many years already, but about 2014 and 2017, I think. All right, I went into a bit of a semi-retirement mode. All right, and it got me a little bit how to say, I didn't really semi-retire, but I did a lot of work for the institutions. I did a lot of quant method design, a lot of institutional work. All right, so less on the speaking, but recently back into the speaking, because I think because that's also the influence from my children. They really talk a lot. So I remember that time when I was pregnant with them, why I was talking a lot. I really enjoy talking. So recently I started a little bit on the training side. So if you have not attended some of the sessions, I'm also training for SGX Academy. I have a full course with them that's IBF funded, 95% funded. So you can take that as well. But a lot of time I have my own trading and training. So just to share a little bit about my approach to wealth. All right. So first I have that segmentation in my portfolio, or rather segmentation of my brain, and I have that's very the passive type of investment. So I have the Singapore REITs, bonds, the mutual funds that give me all the income. All right, and I think that that's really very important, because in times where trading are not doing very well, and times where the market is just not doing what it should do, right, then that money that you have, that investment portfolio that you have, all right, is going to be very important to give you that recurring income, right? And with the SGX, I'm also doing how we can extract more yield, all right, yield extraction of your existing stock portfolio with, let's say, the futures trading, all right? Then myself, all right, every morning, very active in the Hong Kong market. The reason why I'm doing the Hong Kong market is I think that some of you would know that I need to sleep at night. That's one of the things I always joke, but that's true. Okay, I need to sleep at night, and I sleep quite early, so that's why the morning part is very intense for me. All right, so I'm doing the Hong Kong stock, the Singapore stocks, the high momentum stocks. The trading of the indexes, the forex, commodities, and then you say, hey, look, Binni, you're doing almost everything. Why? Because a lot of my methods are really automated. I want to share that with you today. All right, how to use a fair bit of automation, how to use a fair bit of a machine to reduce your frustration and to help you to trade into, and hopefully to trade into a lot more money. All right. And one of the things I always insist that I must do is that I must do the exercise every day in the morning. All right, so that's a 50 minutes exercise, 30 minutes of really the high impact exercise, and 20 minutes of the jogging. And that's something that I don't miss every Monday to Friday. Saturday, I will go for cycling, and Sunday, I will give myself a rest. Okay, that's what I will do. All right. Okay, now, so let's talk about the trading frustration. I'm just going to share with you, not as a trader, or not as a trainer, but as someone who are with you, just to ask whether have you complained to your friends some of your trading frustrations. I mean, I complain a lot, and to be very frank, you don't want to be with me when I trade, because then it's how to say, if things don't go well, then there's a lot of things that come out from my mouth. All right. Now, have you ever happened to you before that, for example, when you buy something, and instead of going up, right, price always come down? I won't say always, but most of the time it will come down, all right? And you're frustrated because how come that other people can buy already, and after that they will win the money, and why is it that after that you bought, you will always come down? Or for example, you have shorted, so there are a lot of instruments that allows you to sell first, okay, and instead of going in your own direction, it just move up, all right? Or the worst thing is that after you bought in and you decided to hold a bit of a duration, I mean, in terms of Singlish, we say you decided to tong, all right, tong, right? Therefore, after you finish tong and you tong some more, all right, and the moment you decided I can't tong anymore, I can't keep that anymore, right? You decided to sell. And what happened after you sold? You will just move up like nothing ever happened. Okay, and then you say, why am I so unlucky? Why is it only me? I can assure to you that it is not you only, but this is what I'm going to talk about. Why is it that these kind of things happen to all of us, and why it doesn't happen to somebody else, or how's the big boys out there, all right? And where they are making all the money and we are making all the losses, all right? And I hope that I can provide you with a solution, because these are the solutions that we provide that to myself, I provide that to myself and also to my community, all right? Now, just to talk about as a background why all these things are happening. So I know that it's painful, but it always happen. Now, you have to understand that right now, the instruments that we are trading are very, very different. Very different from when I first started about 25 years ago, all right? At that point of time, trading was quite simple. You have the equities, you have the futures, and that's almost straightforward. But now you have many things that you have, for example, the CFDs, you have the options around for a long time, but then you have things which are being offered over the counter. We call these OTC products, okay? And they are called, I mean, to us, they're called derivative products. There's a lot more derivative products out there, all right? These derivative products are being offered to high net worth clients, and often the underlying that's being involved, they are equities, okay? Or they could be Forex, they could be currency, or they could be even commodities, basically anything that can be traded. Even water can be part of a underlying for a lot of trades to happen, all right? Air also, okay? So when all these derivatives are out in the market, then the trading dynamics that we have understood seems to be off balance, because there are a lot of times where all these OTC products, over-the-counter products, they make an impact on the market, and certain things have to happen. All right, I'm not sure whether you heard of things such as the equity link notes, ELN. All right, ELN works specifically on the expiry of a product, of that ELN, in a certain period at a certain price. So therefore, certain price must reach in order for example, the banks and the big boys to make money. And certain price must not happen to you, all right, in order for you not to lose money, okay? Therefore, many times we start to observe that price will move singularly in a certain direction, and it seems to force to move to that level, and soon after, immediately, it will just flip the other side. Okay, so that's a lot of frustrations that we have. Now, also at the same time, we have to admit that there are a lot of trading automations out there, right? A lot of banks are using, a lot of funds are using, and then in fact, a lot of like retailer, even like myself, we are using all these automations. Now, these automations, they work on differently, but I can assure you, with all the experience I have to do all these automations with some of the hedge funds and some of the institutions, we are working at the end of that on a few theories that we have. okay, few theories out there. And all of these few theories all streamline into perhaps only one or two theories. And therefore, when certain automations moved, or certain machines or certain robots are being deployed, they will come out and end up in the same outcome. Okay, similar outcome, not same outcome. All right. Therefore, when all this happens, things tend to move in a very fast manner. So such as, for example, last time we might have U-shaped reversal. Now we don't have, we have V-shape, or not even V-shape anymore. We have just a down and an up. That's all. I don't know what this shape is called, right? But basically, these are all the problems that we have. Okay. Now, one of the things I always heard, right, is that people will tell me, hey, is it that my broker is tripping my stop? I'm not sure whether you heard of this term called tripping stop. Is it that my broker is watching my position and they purposely flush my stop and then make me lose money? After that, it will move the other side. But what I want to let you know is that the brokers are not doing that. Okay, this I'm quite confident about that. But the professionals, they do know your levels and they know your volume. Okay, they know your levels, they know your volumes, and it makes sense for them to trip that level so that they can have maximum profit out of that. All right, and this has to do with a lot of derivative products and OTC products that are being launched out there, which are not actively traded out in the open market. Okay. Now, so rather than we complain, rather than we suffer the pain, so my idea and my proposition to all of you is that why don't we just trade along with them? All right, that's the objective of today's session. Now, before that, let me just bring to your attention whether you have seen all this sudden movement happening to you. Okay, so I'm just going to share with you some of the live trades here. I mean, some of the charts that I have here. So what I have is a platform. Right, and this is the Nasdaq. So this is the CFD of the Nasdaq, right? Nasdaq 100, but it definitely replicate the movement of the Nasdaq index. Okay, now let me just talk about what happened during the COVID period. Okay, so I don't want to say what you can do, but I just want to bring to your to attention certain price behavior out there. Okay, number one, first behavior. We used to know that there will be this V-shaped reversal, okay? But right now, it's more than the V-shaped reversal. What we are seeing right now is that certain price bar, like the one that I'm highlighting here, okay? So this is a weekly chart. One bar is a week. I understand that week is too long, but let me just bring out this behavior for you, okay? Now, when you have a price bar that moves down a lot, well, we treat these as negative, as bearish. What is happening right now is that it's almost that there is no pause in between. They can switch the mood, right? From a very, very negative, very, very bearish mood here that was being highlighted by this bar into an extremely bullish mood immediately, almost like 180 flip. You can see that it happens like a black bar that's very bearish, and not only that, this very bearish bar closed right to the bottom. Okay, not halfway, not on top, but right to the bottom, as if like last week was seriously the end of the world. And what happened the next week? It just flipped upwards, like nothing happened to regain its upward movement and to move in such a manner here. Okay, so this is what I'm trying to point out. Have you experienced this? Last week, all the news flow seems to tell you that it's super bearish, like it's the end of the world. Then the price will move up like this, like nothing happened. All right, so let me just show you again another one more. All right, this is again the Nasdaq. I'm just using a Nasdaq as an example, right? So this is a Nasdaq. This place here, okay, again very negative. Next moment, it hit like nothing happened, super bullish, right? So this type of a 180 or 360-degree bar, all right? So we have seen a lot, like somewhere around here, also long, huge bar, okay? Now what I'm going to do is that let's talk about the recent Nasdaq movement. Recently, it is said that because of the rising 10-year yield, all right, then of the possible of inflation, right? We're going to see, for example, the the market selling out of the tech stock, which are essentially the growth stock, to move inside. For example, instead of doing Nasdaq, right, the tech stock, they are moving into the Dow Jones. Okay, so we can start to see the Dow Jones are actually moving up. All right, but again, let's take a look at somewhere around here. Right, we are no longer seeing those type of candles that we are familiar with. Okay, we are seeing those kind of candles where we have long downs and a huge up, like a flip of a 360-degree turn. Okay, so that's the price behavior here. So one moment our brain has to sway from really very negative to the next moment to become very positive. All right, now same thing, let's talk about something that's here. All right, one moment it was like super bullish, next moment it just flipped and reversed whatever that was being bought yesterday. And we are seeing this type of movement a lot and a lot and a lot. And it doesn't happen only during the Nasdaq. It also happens, for example, in another index that I really like, which is the China A50. So China A50 has been moving very nicely since the start of the year. Now, in fact, that if you are in my other training sessions, you know that we went huge on the China 50 somewhere last year in September. All right, so that's because of the cup and handle pattern. But we can see that, you know, somewhere in the Jan when it opens, the China index was one of the best index to trade. And then what happened? It was all white. Suddenly it flipped the other side and it goes like, oh yeah, starting black color, and it plunged like 20 to 23% right now for the CN50. Okay, so this type of a huge drastic movement, non-stop movement, never give you a place to breathe. Okay, that type of movement that we are seeing it. Okay, so for example, if you are talking about FX, okay, FX, Aussie, you know that I trade a lot into the FX. So movements such as Aussie dollar was really very strongly up, all right, huge up. Then suddenly when you want to flip, it also reversed like nothing happened. But not only that, it reversed and nothing happened. What happened before that huge reversal that we're going to see here? Okay, things such as the price has been pushed up all the way to close right to the top. Okay, this is the behavior that's very frustrating. Close right to the top as if that it is so super bullish. Okay, the next moment without any reason it closed right to the bottom. Can you see that these are the behavior that we are seeing? Now you might say, hey Binni, you know what you're telling me is almost like a candlestick pattern, and we call this candlestick pattern a bearish engulfing. Okay, that's more to that. You have to observe that the behavior of price right now is almost like to tell you one instant super bullish, the next instant doesn't need to breathe to flip the other side. Have you ever understand why it's happening that? Okay, so that's the first behavior here. Now let's talk about the second behavior. Right now, all this will have an implication later on to your trading experience and to how to overcome that. All right. Now, next is that. Okay. Now, next is why is that so? Just to highlight that, you know, technology makes trading very different right now. Such as, for example, the price movement are very sudden. Okay. The price range is easily exhausted. All right. And then you have to have one question: do you chase or do you not chase? Very important. Do you want to move in, all right, or do you not? Okay. Now, next question to you: why is it that sometimes when you traded, you have to wait for a long time, and after you are so frustrated and you are so tired already, then those trades exploded? Why is it that some trades can explode very easily, but then not the trades that you are holding? Okay. All right. Now, I know that I'm sharing with you all these weekly chart. That's because there's a reason why certain things are happening. I need you to observe this, okay? Because right now trading is no longer the same anymore, right? So we have to rely on what we call the multiple time frame analysis. What the higher time frame is leading to the action in the lower time frame. Okay, so a lot of frustration lies in you not trading the alignment of the time frame. Now take a look at this Xiaomi here. That happened about last year, and of course that we all know that the the Chinese technology stocks, and of course the US technology stocks, they're all moving down right now. But the question would be, what happened to cause price to burst up in just 3 weeks, where it's going to result in a 70% gain? Okay, so in just 3 weeks, instead of it moving slowly, what caused it to explode upwards? Okay, so that's something that we can do. All right, and we know that we can address our trading frustration. So that's one question that I want to bring up to you, because I brought up this particular trade during the SGX Academy sessions that I did, right, on the 20th of July. Then the question would be, what made me bring up this trade around this place here? Okay, so that's very important. What did I see so that I can bring up this trade and then it exploded upwards in a 70% gain? Okay, all right, so that's first question, and we're going to answer that to you for you later on. Okay, don't worry about that. All right, but one of the frustration that you have is that you're going to give up the trade, right? And then after you gave up that, it exploded upwards. It's not frustrating to make money, to lose money to me. It's frustrating to say that I give up that trade. After that, that trade move up. Okay, not only that you move up and exploded up right in my eyes, right? That's really frustrating. Okay, so that's my frustration. Next, let's take a look here. This is a chart on OCBC. Okay, also a weekly chart. Now, can you see that each of the movement of OCBC, or after the arrows have plotted somewhere around here, each of them actually move up huge. And why is it that it is moving very slowly here, very slowly somewhere around here, and then moving somewhere around here? Now, why is it that after this huge down bar and after this huge up bar, for example, all right, then price expanded upwards, exploded upwards? Why must this action happen? Okay, so my next question to you. Now, if you remember trading the OCBC somewhere last year in October, and if you traded into, let's say, the Straits Times Index somewhere in October, we saw that there was a lot of support at around this region here at 2005. Okay, 2005 in the STI Index, right? And we knew that it was very low. But one fine day, the STI had to trade below 2005 to go to 2,400 and something. And that scares a lot of people out, because I was interviewed during this bar here, and the reporters asked me, are we entering another next phase of a bearish market already? Okay, so the question is that why must all this down happen first before it just exploded upwards? Okay, so that is a common pattern here. All right, now next, let me just, okay. Now this is a chart on gold. This is a chart which is a daily chart on gold. You realize that when gold made this huge movement, okay, all right, you make this huge movement, there was an arrow that's automatically being plotted here. Now something happened in terms of similarity before these arrows. Okay, it goes like this here, one down and then one up. Okay, one very black down and one very huge up. Okay, it's like almost a recurring pattern, and after that it exploded upwards. We saw that in OCBC as well. Okay, it seems that the market has been artificially pushed down to cause a lot of pain in people, and after that it just resumed up that nothing happened. Okay, this happened before the joy of a lot of other traders out there, but this happened, this huge big down here happened at the expense of us, perhaps. Okay, I'm not saying that it might happen to you, but it could happen at the expense of many other traders who have already gone long. All right, okay, now then let's address all these things, and then what I'm trying to talk about right now. If you are frustrated on some of the trades, then there are recurring patterns that we observe. Now, one of the frustration that we have is that, number one, we are seeing a huge switch in price. Okay, a price that moved down very fast and immediately it will go up very fast. Right, so this is what we are looking at right now. Okay, because of automation, you start to see that before price actually exploded upwards, it will move down first and before it goes up. Okay, now we might call this a behavior that has been artificially put in, But the second frustration that we have would be that before price exploded, it will force us to give up, okay, a trade. Now, not only that, when price exploded upwards, what it will do is that it doesn't give us any chance to enter again. Okay, that is the second frustration that I want to bring up, right? If you miss that turning point, if you miss the best point for entry, you realize that it will just explode upwards, right? Like there's no more entry. Okay, it's not only about following the trend. It's more like you don't even have a chance to enter inside that explosive trend. Why is that so? Because price move up, never ending like a energizer bunny, and it just keep going up. So what will be the third frustration that cause people to do? It cause people to enter somewhere in the middle here by just jumping without waiting for a confirmation, without waiting for a sign. So a lot of people say, hey, look, because it's just going to move like 360 up, because I won't have a chance to enter again, people just jump inside here, midway, and this causes the behavior of the moment you entered, it will just keep on moving down. The moment you bought, you will just keep going down. And once it keep going down, you give up and it just move like nothing happened. Okay, so all this frustration adds up to all our actions, all right? So when you have all this happening, then we need to recognize one phenomena out there. And what is this phenomena? All right, this phenomena is that there's a new pattern that's happening in this new way of trading, new pattern that's happening because of technology, new pattern that's happening because of human behavior, new pattern that's happening because of a lot of new instruments, right? And I like to introduce to you this new pattern here, which I call this pattern called wash and rinse. Okay, now before I explain this wash and rinse, all right, let me just say that this pattern of wash and rinse I'm presenting here is for the buy side. Okay, it can be applied whether it is a day, whether it is a week, or whether it is a month. All right. Now, if you apply this in a day time frame, that means this candle is a day, or this price pattern is a day, then it works equally well. But it means that the movement will be a little bit lesser than the movement that happens in a week. If you apply this in a week pattern, that means that each of the candle here is a week candle, then you will realize that it will move tremendously, a lot, much more than what happened in a day. All right, so let me just explain this new pattern that evolved, and you can use this new pattern, all right, to overcome a lot of your frustration. Okay, so let me just talk about that now. Number one, you have to wait for what we call a wash behavior to happen. So this is a washed bar, all right? Now, what does this wash bar attempt to do? First is that price was supported. That means that it come to a stop, right? In a what we call a sub level. That means that this could be, because this is the buy pattern, this would be like a support level. It came to a support level. By right, people should be buying inside here, all right? But because this so-called support level is very obvious, all right? And in order to extract maximum profit from this particular trade, what the market choose to do, or what the big boys want to do, is that they will purposely push price down, all right, to what we call an even stronger level here, all right? And then we call this an even stronger level. Now, this resulted in few actions. Number one, those people who bought here, okay, into this place here, once they see this very black candle, which is bearish, what will they do? They will decided to take a loss, okay? All right, that means they will decided to sell, all right? Because then they originally wanted to buy somewhere around here. All right, when they see this wash bar, they decided to actually sell out, because then it means that the trade was wrong. Now, the second group of people are people who say that, hey, look, this is a sub-key level. It has been supported, but then because of this very black candle here, they decided to go short. Okay, so the second group of people who are essentially bearish, they decided to say at this very black color bar, they want to go short, all right? But in the market, this black color bar could be, we are not sure at this moment, could be purposely being pushed down, okay? Pushed down to trigger stops. Meaning that, for example, when you have a stops here, or you put in a stop loss here, right? They could be used to flush people out so that whoever who wants to accumulate in this place here, they are able to buy that at a cheap price. Okay. Now, then what happened would be when price moved up, okay, we call this the rinse bar. All right. Then few actions happen again. Those people, number one, who bought in earlier at this place here and they sold out, they realized that, hey, look, price actually moved back to my original position, my original price. I'm being tricked. All right. So I wanted to buy these and keep, but because of this very negative bar, I decided to sell. I'm being tricked when the rinse bar happened. Then what will be the first group of people try to do? They will try to buy back. Okay, so they will try to buy back and their action would be buy when the rinse bar happen. All right. Now the second group of people, who are that? They are the one who shorted when they see this very black color bar. When they shorted, when they see the rinse bar happen, that means the price actually moved back up above the sub key level. They realize that whatever negative thoughts, negative actions they had, right? Whatever bearish actions they did, okay, somewhere around here, they will realize that, hey, look, they are wrong. Okay, they have merely shorted right into a very strong support. They will rush to square to cover their short, which in end will result in a buy behavior, which is the rinse bar. Okay, buy behavior. Now, next group of people who are the people who created all this artificially up. They have been happily buying cheap from this guy, and when they let go of the suppression, all right, finally to let price move back up, they will join in the move again. Okay. Now, when after the wash and rinse happen, what you're going to realize is that when you see the wash and rinse, what you're going to realize is that the subsequent movement are really explosive, and that's really what we want to achieve here: an explosive price movement after the wash and rinse has happened. Okay. All right. Now, the wash the wash bar, that means the wash bar here, all right, is a temporary price movement. But more important is to recognize that when the price are being washed downwards, there's an even stronger level, and very important that the earlier structure hasn't changed yet. Okay, I explain a little bit more about the structure later on. All right, because the explanation of a structure requires a bit of time here. All right, so let me just expose you to a little bit more of wash and rinse, and then you can start to see that. Now, let's take a look at this NASDAQ chart. Now, what we did is when we traded this NASDAQ chart, our entry was somewhere around here, okay, at this bar. All right, now I need you to zoom in to some of the price bar earlier. Do you see the wash bar happening? Now, how to identify the wash bar? You look for one that is black in color, and the black in color is very long, okay? And it must close below the previous low. So the first wash bar that you can see would be somewhere around here, okay? Somewhere around here, right? So this would be the wash bar. Can see that? All right. Now, when the price being forced downwards, you realize one thing. You realize that the structure, right, of the previous price behavior hasn't changed, right? So one of the structure identified is the support, right? When the price has been washed down, right, then what happened is that the price, when it pushed it down, the previous structure, which is the support here, hasn't been broken. In fact, when it pushed it down, it pushed to an even stronger support here, okay? And then where's the rinse? The rinse will come back somewhere around here. So that's the rinse bar, okay? When price close back again above the, what we call the wash line, okay? Now, same thing. If some of you can't see that this is the rinse bar, definitely somewhere around here would be the rinse, right? Rinse bar here. Now, what happened is that those people who shorted at the wash bar, when the rinse has happened, they will realize that, hey, look, they are totally very wrong. Okay, what would they attempt to do? They attempt to buy back, all right, to square their shorts. Okay, then the second group of people originally was a very strong support, so they might have bought into this candle, which is called like a hammer candle. All right, then they were happy for a while. Okay, happy for a while, but when they saw that the price moved back down, and then it might be a resumption of that previous downtrend, they quickly sold it out. Okay, they sold out, right? And after that, After they sold, they realized, oh yeah, they were wrong. So they bought in, and that resulted in a huge upsurge in price. More important, people who created this wash behavior have been happily accumulating here. Okay, now, so this is a very typical wash and rinse behavior. So let me just show that to you, the wash bar. Okay, the wash bar and the line that's very important, we call that the wash line, and then the rinse bar. Okay, now I'm not sure whether you can see other wash and rinse here, wash and rinse pattern here, right? So this is a day chart in NASDAQ. Okay, the other wash and rinse pattern that you can see, right, would be very, very obvious, which is for us to sell, because the NASDAQ originally had a bit of a down here, right? Okay, so we can observe that price has been stopping around this behavior here, somewhere around here, stopping that. Okay? But the market has to artificially push price up, okay, push it up, all right, to close above the wash line. So we call this the wash line. And what happened? Okay, they close it right to the top. All right. I mean, I'm okay if they close to behave like a doji. The market is very nasty right now. They don't close to show you a doji. They don't close in between to the lower of the range. They close right to the top of the range to tell you that they seem price seems to be ultimately still very bullish, but yet they immediately flip the other side. Okay, so we have another wash here, and then we have another one more rinse here. Okay, so there will be a lot more example that I can show you, because you can find the wash and rinse everywhere, so that, you know, if you how to say, if you are frustrated, don't be frustrated, right? Because these wash and rinse are always happening. What you have to do, like some of you say, right, is just to follow the big fish. Okay, join them. You can't fight them, you join them, right? Let's not be a small fish. We join the big fish so we can become medium fish. Okay, so this is oil, right? Oil trade is very, very obvious, right? You can see a wash and rinse here very nicely. Now, what happened during the September last year, right, was that a lot of people are expecting oil to stop somewhere around $36, $35. Okay, so you can see that there was a support here. We know it. So there was once a support here. Let me just draw that down. Okay, so we call this an S. And when price came down around here, so that's another one more support. So it was like almost like a textbook example. You buy at support. So a lot of people bought in oil at around here. Okay, somewhere around here, they start to buy in oil. Okay, and then, I mean, textbook will say that, hey, look, put your stop loss below the support zone, put it below, all right? And then put like, you know, $1 below, $2 below, or whatever dollar below. No way. What the market did, right, was to flush all the stop loss, flush all of them as much as it can, because price, instead of stopping at $36, which a lot of people went in to buy, all right, it flushed all the way down to about 33, 33.50. Okay, and then after that, after it flushed, what happened? Okay, what happened to that subsequent price behavior? It just moved up like nothing happened. Okay, so people who lost here, who lose the money here, they are all being washed and rinsed out already. Okay, so that was a very clear wash and rinse pattern. All right, now again, back into oil. If you are trading into the oil, or we are trading in the bullions or the forex, this type of candles will always happen. And right now, and explain why they're happening in the stocks, why they're happening in every country stocks, why they're happening in forex and commodity. Okay, the type of candles: one huge down, like very, very bearish, and then one big up, like nothing happened. Okay, one big down, which is what we call a wash. All right, and then one huge up. Okay. All right. Now, it is not only about the candlestick pattern. It has to do with structure, price structure. All right. The price structure has to interact between different time frames, where we have the week and the month. So a lot of retailer, they don't have such sophisticated method, or they don't have the programs that we design for the institutions, or we design for the big boys, right? These programs allows them to track what happened in the month, what happened in the week, and what happened in day. Okay, so for example, this break at this point here was clearly a wash and rinse, because the higher structure, which is the higher time frame structure, is actually pointing that price right now is the best place to buy around here. So what we don't have as an insight is we don't have what they are seeing, okay, what they are able to see that. So this will give them a chance to flush the small guys out. Okay, so that is something that you have to recognize. Okay, so rather than to say that we don't have it, then now you know about this, right? You know about that there are such things happening, and then we can use it to our advantage as well. Okay, all right. So let me just move on. Okay, so that's basically the wash and the rinse here. All right. Okay, let me just give you something more recent. Remember what happened during the GME, the GameStop, the Reddit thing? All right. Then the small retailer, they work on the GME. All right. Then suddenly one fine day you heard on the news that okay, the silver move up because of the Reddit group and because of GME group, they move on to talk about the silver. Okay. So the result of what you're going to see in the silver here was that the Reddit group pushed the silver all the way up here. All right, so that was the end result. All right, more important, they started actually trading around here. So by the time that the news was out, when we see that on the news, all right, we saw these huge up bar in the silver. All right, but let's work on the wash and rinse. I need you to look with the help of the small little green arrows here and the small little red arrows here. Okay, all these plots to you the wash and rinse automatically. Right. So before the GME frenzy, because before the Reddit, we already spotted actually the silver is about to move. All right. So let's talk about a very simple price structure. Okay. Of course, there are a lot more complex price structure that we are using, but just talk about a very simple price structure. Now, can you see that price was actually supported here? Okay, so we assume that this is a support. The first wash actually came from this red color bar here, so that's the wash. Okay, price closed down to back right into a support. Okay, in the very near term support, right? And then you see this green color thing here, and the rinse happened. So that was our first entry into the silver under the wash and rinse theory. Okay, because the structure, the near term structure, was at a support. All right, now let's take a look here. This part, I'm just going to clean this away, and then you're gonna say, take a look at this red color candle here. So we know that this was a wash because price has been pushed down, right? Okay, and then that's your wash line here. So price closed below it. Now, when it start to push down, you realize that whatever that is it did, right, was right into the same structure, and that structure happens actually in the higher time frame, which is the week. Okay, the week structure, that's something where the retailer don't really readily see that, right? But definitely very much available to the institutional side. Okay, this one I can assure you with all the work that I've done with the institutions. All right, now when the wash happened, a lot of people thought, hey, look, you know, silver is very, very bearish. Let me just short that down. Okay, sell it. But they didn't realize that when they sell it, they sell right into a support. Okay, now when it flipped the other side, this place here, so that's where the rinse happen. And what we will do is that we won't trade in the day. That means that this is a day chart. All right, you're gonna see this is a day chart. But what we will do is that we would trade this signal into the lower time frame, such as a 1 hour or a 4 hour chart. So these will let us have the maximum profit. Okay, so our entry will be somewhere around here. Okay, at this place, so that we can write this. Now, in fact, when the news was out, I was just telling my guys, I say, hey, look, this up here pretty much looks like a wash to me. Okay, why was that so? When price closed above it, and when the cat was out of the bag, the market knew about it, perhaps that many people will be jumping in. So this would be where the big guys who force it up will be unloading to the small guys. Okay, and indeed next day the rinse bar came down, which is the black color. Price close up and then rinse back down. So we had a long side here, we bought in here, and then we actually joined the big guys to short into here. All right, and actually silver actually moved down very nicely. All the work of wash and rinse. Okay, all right, let me just clean this and then show it to you. The washer. All right, first the wash line, then the wash bar, and then the rinse bar. Okay. All right, now, next, question to you. So you know about the wash and rinse, we can look at them a lot more, but I want to talk about your previous frustration and how you can use the wash and rinse to address them already. Right now, number one, NASDAQ. Do you see these arrows here, the green color and the red color? All right, so all these will automatically plot the washed and the rinse. Okay, so there's a very clear wash and rinse bar here. When I talk about the earlier structure, remember the earlier structure? So this is the wick structure, W wick structure. Okay, then do you see the wash here? So that's the wash bar here. So that's the W. All right, and then this is your rinse. Okay, now you see this little green arrow here. So this will automatically let me know that there was a rinse bar here to go long. Okay, so what we did is that we plot automatically the wash and rinse signal into the indicator, and the indicator will find all these wash and rinse pattern for you. Later you can get it for free. Okay, I'll show you the website to get it for free. All right, so let me just talk about how to use them. Okay, all right, let's take a look at the S&P 500. Can you see the wash and rinse coming in? Okay, can you see the wash and rinse coming in? So that's your wash, and then that's your rinse. And the small little red arrow here, that plays the wash and rinse. All right. Now, the good thing about wash and rinse is that it's a very, very flexible way to trade. All right. The minimum candle would be straightforward too. One wash, one rinse, right? But it can be used in the day, in the hourly, in the lower time frame, in the week, and in the month, as I explained just now. But more important is that you can have many multiple bars between the wash and the rinse, right? Basically, the longer that wash and rinse pattern they're going to have, that is going to give you the indication that there's a lot of washing going on for this particular trade right now, okay? And then when the rinse happen, right, it's going to happen really drastically. But what we've seen right now is that a lot of times, because of automations, because of all the machines that big guys have, a lot of wash and rinse are just like this candle here, these two candle here. Let me just clean that and then draw it nicely for you, okay? Such as this as a wash, and then these as a rinse, okay? One bar that goes up, and it has to do this, okay? It has to close right at the top, as if that it is so bullish, all right? Then a lot of people who didn't dare to buy around here, okay, who didn't dare to buy around here, who didn't dare to buy around here, when they see and hear the news saying that S&P and other huge surge up, and all of them will flood in to buy here and to buy here. Don't forget, the moment that you bought in, that will be where the big guys unload to you, and then they let the rinse happen. Therefore, you start to see that one long bar just flip the other side. Okay, so these are very, very common patterns that's happening, right? And that's caused a lot of pain to our hard-earned money. Okay, so we have the wash and rinse that's automatically being plotted, and then the other one here. So this is actually the wash and rinse, right? The washer that didn't move below a day structure, and then it rinse back up. Remember, it's not only about the wash and rinse, right? It's also about the structure. The simpler structure would be in its own time frame, your support resistance. Okay, the more complicated ones would be a multiple time frame type of a structure. Okay, so one more wash and rinse. Why this wash and rinse has the wash was here, this wash here, and then that inside candle here was about 1, 2, 3, 4, 5 of them before the rinse happened. But you know, as I explained, right, the longer that this duration here, all right, the bigger that movement. Can see that it was an explosive downward. Okay, but the good thing is that we have this indicator here, right? So this one that plot the red color. So I mean, to be frank, sometimes that you might not want to sell, but when you see the red color comes out, right, you also don't dare to buy anymore because you know that the rinse has already happened. That keep you safe also. By not trading, it let you save some money. Okay, so that's very, very important. All right, so one more wash and rinse here. You see it moved all the way up, okay, and then rinse back down. All right, so this one and then one more, go all the way down, hover for a while, and then goes back up. Okay, wash and rinse here. All right, okay, let me just continue. So there is no maximum wash and rinse bar, but it can be 2, it can be 3, 4, 5, 6. So this one will be the one which is on silver, the one that I pointed out. In fact, that when the green color came in, right, we knew that, okay, silver is going to move because then it's into a very strong structure. All right. Now, okay, next, how do you reduce your frustration? If you can reduce the frustration and agony, right, it's half the battle won. Remember, I'd say about that, when we trade, we want to have the better health, but again, that you don't want to end up in a lot of frustration, a lot of agony. So therefore, let's talk about this one here. During the last year election, right, for the US election, right, a lot of people dare not enter, all right. In fact, that what we had was just purely using the wash and rinse. We actually enter one day before the confirmation of the US election. Let's talk about this frustration that you might have, okay. Let's assume that we know that the US market, whether it's NASDAQ or Dow Jones, they are very good. They are in an uptrend. So a lot of people say, hey, buy, right? So sometimes when we buy, we rush into an entry. What do I mean by rush into an entry, right? We just think that it's going to be supported. We're just going to buy here, for example, at this point here, or buy here. Okay, we rush into an entry. Right? But you have to realize one thing. Let's say after your session with me today, you have to realize one thing, right? A good move will always involve wash and rinse. Okay, this one I have to assure you, a good move have to kill people. Okay, that is the bad truth and the truth that we have to learn today. A good move, some people has to sacrifice, right? So therefore, a lot of people bought in here, but no, not for us. Okay, we saw that the wash came in, right, just few days before the US election at here, this place. We were actually getting ready to buy, all right? And then we were quite convinced when the rinse came in here, okay, at the green color. So we bought in, and even if you wait for the rinse to buy in, right, at least it saved you quite some money, right? Number one, a lot of agony. Remember, our joy comes in when the price move fast, right? Move up very fast. And when the price moved up very fast in our direction, we are less likely to do stupid stuff. Okay, let's face it, when we trade, we do stupid stuff. I mean, for me, myself. All right. But when the price is very much in your direction, you're going to be more calm and you're going to do less damaging things. Okay, so this is where we let the wash happen first. Meaning that, for example, let's say you want to trade into something, right? And there are so many instruments. In fact, anything we can use the wash and rinse concept, because that's human behavior, right? And that's how the big boys try to cream a lot of money from us. Okay, so the wash and rinse will happen. So you wait for the wash to happen first. Okay, let the wash happen. I know that you might not be able to get it at the lowest point, but at least you are able to stop yourself from the agony of being stopped out, from buying too early, and from the joy of having that explosive movement. Okay, so that's very important here. So we have two signals somewhere around here. That's the wash and rinse. Do you see the red color thing? The red color is for us to sell. So we sold first. Just move too fast. Okay, too excited here. So we sold first somewhere around here, and after that, we actually bought in our trade. Okay, so that's the wash and rinse. I mean, I could have another 3 hours. I could show you so many wash and rinse. That's happening everywhere. Okay, let me just show another one more. Okay, now this Aussie trade is something that I recommend to my FX guys very strongly for investment. Okay, during the March period last year where we have the COVID, right? And I said that I make my money from Aussie, buying Aussie at around 58, 0.58 and to 0.62 back in 2009. Now, do you remember what happened during 2009? 2009, we have the subprime. We have the US financial crisis, right? So Aussie had a huge drop all the way to 0.56, range to 0.62, right? So that was the low in Aussie, and I bought in slowly around that point of time. So when the COVID happened during the March period, I told my guys, hey, look, if you are looking for Aussie as an investment, whether you want to go and buy a house in Australia, whether you want to go and buy, whether you want to change money for your children to study, whatever, then at that point of time is the time, right, to actually get in Aussie. Okay, so I know that this is a weekly chart, but I just want to bring to you that the wash and rinse can happen in the weekly chart, and it happens in a weekly chart, then it's going to move a big deal. So do you see the green arrow, green tick here? So that's the green tick. Okay, so this was the wash, and then this was the rinse. Okay, it happened in just a duration of 1 month. But when you are getting in your Aussie, you'll be getting in the average of 0.62, for example. Okay, now, so I told my guys, you know, in my own Forex group, and I say, hey, look, if you decided to buy into, let's say, equities, okay, and you want to buy into unit trusts, then you want to have your position hedged in Aussie. That means instead of buying into dollar, instead of buying into, let's say, Sing dollar, right? You can earn from FX as well. You buy into a fund that's hedged in Aussie. So I think a lot of them did that. So they earn from the Aussie appreciation and with the equities appreciation. Okay, so that's how we use the FX in line with our investment as well. Okay, and that's a very typical wash and rinse that's happening inside here. Okay, all right. Okay, then next is key question. I know they have a lot of questions. I will answer that, but I'm just going to go through the details. Number one, how can you profit from it, right? Xiaomi, why it exploded? Can you see the wash first and then the rinse? Yes. Okay. More important, the weekly structure of this is actually up. Okay, and that's why it exploded. Where? Because you are trading the short-term agony. All right, so the market is actually pushing it down. Okay, asking the short-term people to sell cheap Xiaomi to them. All right, and after they have accumulated enough, they just let it go. All right, and then they ask the next wave of people to join them here to buy back from them while they unload the position. All right, so that's always happening. Okay, so that's the wash and rinse here. Can you guys see that? You just have to zoom in and you can see that. Okay, and that's the reason why I presented the 20th of July in one of my session on the live trading session with SGX Academy, because there's such a clear wash and rinse happening, and the structure was up in the weekly. Okay, all right. So OCBC, when STI moved to 2,420, 2420, all right, I had an interview. I think I'm one of the crazy guy out there to say, hey, look, you know, it is just a fantastic place to buy, but we can't say that during a newspaper interview. All right. Now, what we do is that if you can see that this is a down bar, it has been artificially pushed, right? But it never pushed below that support level that we're going to have here. Never. Okay. So price actually pushed down to close right into the support. But some people might have shorter thinking that it's very bearish. But see what happened next? The funds actually bought in big time here. Okay. All right. So that's also another reason why this happened. This one I cannot say. Okay. It has to do with the OTC product. It is not momentum trading. It has to do with the multiple time frame alignment. It has to do with the flash. Okay. The flash. All right. Then we go on the level. In fact, I would term this as a level-based trading or trading based on other people's pain, which we don't want this to happen to us. All right. And then I recommended OCBC again, right, around 1035. Why was that? The structure was actually up. Okay, a very clear up structure here, right? Can you see the wash here? And can you see the rinse here? Okay, and from there, OCBC actually went up and to close at the high right now. Okay, so that's a very clear wash and rinse in the Singapore stocks. Okay, now go again. Do you see that wash thing? Okay, you see that wash thing, and then you see the rinse thing. Okay, wash and rinse. All right. Okay, now, so next question. After this, I'm just going to answer your question one by one. All right. I might not be able to answer everything, but then I have one more session with you guys if you are interested to try the wash and rinse indicator. Okay. Number one is that we coded the wash and rinse indicator. This indicator is actually sold, and we incorporate some of this component from all my programming experience with funds, with institutions I cannot review. All right. This indicator is actually sold, but just because of MarketWise, that all my good friends, we are sponsoring you guys, okay, for 1 month trial. But I want to have a bit of a disclaimer with this indicator first. We call the TAW indicator, the Alien Wash indicator, TAW, TAW. Number one, it is good where you have no time, meaning that you want to quickly scan through your stocks or your trades, right? You have no time, you use that to help you, okay? Number one. Number two, If you are a person who always breaks the rule, or you just simply don't know how to draw all these lines, you want something that's unbiased, then it is suitable for you because it plots right in front of you for you. Okay. Now, if you don't want to miss any money making opportunity, right? Then of course that with this you can quickly scan through all the trade opportunities you have, rather than you draw your line yourself and do this all by yourself. Okay, so this is the use of the indicator. All right. Now, therefore, because it's an indicator, by no means it is a holy grail. By no means to say that, hey, look, you know, with this, you're going to have 100% win. It's just going to aid your decision. Okay. And then you're just going to get the indicator for you to see that wash and rinse. But remember what I always say. I said that there's a structure here, right? Remember? And the simpler structure is to just to use that support resistance. But a lot more complicated structures are going on, especially the use of the week and the month. Okay, so for example, I trade this in the hourly time frame. Okay, but we definitely have the week to help us. Can you see that? That's the week here. That's the week structure we're gonna put inside here. All right. So it is not to say that entirely you're gonna see a red color and then it's just going to go sell. You have to understand how it's being done. Okay, that's really very important, right? And one of the things is that every line and every dots are very important clue to our decision making. For example, all these lines, all these, okay, I didn't put the dots inside here. Okay, and all the trades are all executed in the next lower time frame. So for example, if I trade the index, let's say this is a daily chart, right? And then I'm going to see that there is a down bar here, okay, a sell. Then I have to trade that in the lower time frame, which is the 1 hour. So we always do a multiple time frame alignment. But when you get the indicator, one of the good thing is one thing, okay, one of the good thing is, right? Let's say, for example, you have bought in somewhere around here, okay, around here, this place. And then you see that the red color, you know, signal is in here already. Then at least you are being very careful not to keep on averaging up, or not to keep on entering into a buy position. Okay. All right, so this is the purpose for you to keep you in line and check. Okay, but you know, it doesn't mean that you have this, you're empowered to just look at the arrows and the colors, and then green colors you will buy, red colors you will sell. It doesn't happen this way. Okay, so this is something I want to emphasize a lot. Okay. Okay. All right, now any of you trading STI? Because I have a portfolio of Singapore stocks, right? So I use the futures to hedge into my position. So for example, you know, the STI was up, right? And then instead of just selling the stocks which generate dividends, so what I did is that I used the you know, the STI, which the instruments, either the CFDs or the futures, to actually sell that down. So we have, when STI was 3,000 here, all right, 3,000. Okay, you know, you can see it as price was came on being pushed up. Can you see this push here? So this very nice push, and then this very nice push. Okay, I hate this type of push because it closed right to the top, which is a very clear resistance, and then it just flipped the other side like nothing happened, and after that it exploded downwards. Okay, so you can use this TOR as an indication for your existing stock portfolio. All right, so for example, you have a stock, all right, portfolio, which I have, all right, and then when the TOR generate a sell signal, I know that I shouldn't be entering already, but I also don't want to sell my stocks because I bought them at really low. So I will use different instrument to hedge it down. Okay, all right. Okay. Next would be, all right, now let's talk about the 1 month trial. Things move fast. 1 month trial. Now this is the place where you can get the 1 month trial. Please copy this, take a photo or do a scan, all right now, so they can get the 1 month trial of the TOR indicator.
I also post the link in the chat box also. You post the link in the chat box? Okay, good. Yes. Now you can get the link in the chat box, but more important is that I will be doing a training session, okay, free of charge, don't need to pay any money, because I want to be responsible to you guys, right? When you get the trial, I want to make sure that you know how to use them. Okay, so there will be one more session which is on the 30th of March. That's the coming Tuesday from 8:30 to 9:15. All right, and then you can go and attend the session. But to get that webinar access code, you have to go inside this website here, fill in the form. Okay, it will automatically send you an automated email with the link to the indicator and the steps. Okay, how to install, what to do, plus the webinar access code for this Tuesday evening session. All right. Now, if you can't attend the Tuesday evening session, all right, night session at 8:30 to 9:15, please also go in the website, get it, because then we're going to send you the recorded version. Without you telling us that you want, we also cannot send you the recorded version. All right. So please go to the website and then get the free ones. Okay. It cannot be used in TradingView, all right, or Thinkorswim. It can only be used in the platform that we coded for that, and that's MT5. Okay. Everything go to the website, it will explain to you. Does the indicator work for KSLE? No, but the method, which is wash and rinse, will work in any platform. All right. Now, if you are interested, then because of the marketwise event, then we are also launching the special training session for all you guys, which is 6 months the alien room. Alex also took this one, and then he's still now in the alien room. Perhaps he can share more with you later on. So same thing, go to the website. So we are doing this training program where you're going to have 24 months of Telegram broadcast of the Tor signal into your Telegram. Instead of 6 months, you're going to have 18 months of use. That's extra 1 year, right, of use of the Tor 3.0 indicator, the one that plots all the tick and the arrows, all right? We're going to have also the full training session, because I want to let you know what I mean by structure, what are the higher time frame structure and all these, and how to apply that across the different instruments. So there will be these 3 live webinars, and in fact, we have right now 6 recorded sessions on how to use the wash and rinse strategy and a Tor indicator. That means that you get the indicator, and on top of that, you know everything about the strategy, all right? The webinar dates for the 3 live session will be on the 8th of April, 18th April, and 15th of April, okay? 9:30 to 10:30 p.m. Remember that if you can't attend any of the live session, we will send you the recorded session. Okay. Now, what is the meaning of 6 months? The alien room means that we're going to continue to support you, meaning that you're going to get into the support group, and then we're going to post the trades that we are doing and to teach you how to use that with our weekly webinar. Now, just to let you know, the cost is $396. Okay. The last day of promotion is 7th of April. All right, so it's quite a short time, because then we are, usually when we had the previous promotion, there's a lot of people who took up this, and then we have limited space. So therefore, right now we are reducing the number of days of promotion. So it's until 7th of April. After this, no more this promotion, and you probably have to wait for the next promotion to happen, which I don't know when it will be. Okay, so it's $396. Now go to the website. Okay, go to the website. You will find there will be a lot more other incentive for you, okay, of how to reduce your cost fee. All right. Now the MT5 platform is free of charge. Tor is good for newbies, as well as see this as not Tor. See this as a comprehensive training session for newbies. That's very, very important. All right. Now, if you like to have Tor elsewhere, I mean, you can't find that because I created that. Okay, so this will be the alert that's being sent to your phone, and then this will be the support that we're going to have, right? Okay, right now here, 100 pips support, not 100 pips, right? This page here shows you what happened in the lower time frame. Okay, a lot of people ask me, is this good for the lower time frame? Yes, it is good. Okay, it is at this point here showing what in the lower time frame. So there's a lot more just than Tor. Okay, so that's but I mean, I encourage all of you to just try. Okay, since it's free of charge for that 1 month, right? Just try. It works for stocks, it works for CFDs, it works for crypto, it works for the wash and rinse, it works for equities, it works for any equities that we are trading. Okay, all right. Now I'm just going to flash this and take some questions. Oh, so many questions here. So I'm just going to answer some of the trial questions, some of the questions on the trial. The 1-month trial from today, you can download that and use it already. All right. Once you sign up, download the indicator, just put it in. You can use it already. Cannot be used on trading view. Wow, what do I mean by having the indicator on the lower time frame, on the higher time frame, and using it on the lower time frame? Well, the indicator we put in a day or the week, but when we trade very much in the lower time frame, which is the 1 hour or 4 hour. In the FX, we use for the 4 hour. In the bullions and the commodities, we use for 4 hours, right? In the STI or the Dow, the indexes, we use for the 1 hour. In fact, Alex is also using Tor for his trigger. He's attended the full training session, and then I think that he did something very interesting, right, Alex? Because you actually program Tor in your scanning.
Yes,
right?
yes. Let me just have a chat with you first, or do some sharing over here. All right, can you guys see me right now? Can, right? I think I'm in the gallery view over here. Yes, okay. So yeah, so actually I got to know Binni, I think last year through this MarketWise event. So I was thinking, hey, Binni, okay, the Tor indicator, the alien wash indicator, you know, what the heck is that? You know, that sounds very interesting. So I got to know about this method. So prior to that, okay, I've been trading in the market for 10 years already. I also have a CFT designation, which means that I'm a certified financial technician. It's just like, you know, the previous speaker, Terence Tan, like CNT designation. So I read a lot of books on technical analysis, all this stuff, okay? So I know all the standard textbook stuff on the technical analysis, support, resistance, and all this. So then I got to know about Binni's wash and rinse method. It is something that is not found in the textbooks. I've never read anything about the wash and rinse phenomenon in books itself. So it is something that's very new to me. And prior to Binni wash and rinse, I already have my own kind of setup to trade. But after, you know, going through Binni's wash and rinse, you know, the Tor method, I've been starting to incorporate all my triggers just using the Tor method, the wash and rinse method. And by the way, I've been trading FX using the H1 and the H4 time frame. I'm using the stocks if I'm trading stocks, I'm also using the Tor method, the wash and rinse method. So I can tell you that it really works. Of course, you can have all your own trading knowledge already, but you can incorporate Tor into your own trading setup also. So it all stack up to all your knowledge. Okay. So yeah, so I've even programmed kind of a screener based on the Tor method. So this Tor indicator is not a black box. So Binni is going to share with you how it really works during her webinar session. So even without the indicator later on, you are still able to spot your wash and rinse by yourself. Okay. So this is how powerful it is. All right. So since it is free, right, just go ahead and register for this MT5 indicator. So I know there's a lot of questions whether I can use MT4, MT5, whatever lah. But I think we don't have time to answer everything. But just go ahead and register for it. Like, since it's free, right? Yep. And Binni, you want to go through some of the questions?
Yeah, I will go through some of the questions because you're answering. Help me scan through some of the questions.
Yeah. So let me see.
Okay. Any platform related questions, right? I won't answer today. Just have to let you know that there will be a training session on Tuesday. Attend that training session. If you can't attend, register for it. We will send you the recorded version. All right. If you need additional questions, send to me so that I can answer during the training session. All right.
Okay.
Now,
I saw Melina is asking, can you explain what you mean by seeing the indicator on the higher time frame and then executing the trade on a lower time frame?
Yes, because you have to understand that in terms of system design, that's a lot of noises in the lower time frame. Okay, for example, like when you use a H1 1 hour or you use an M15, right? We always have to trade in line with the higher time frame so that number one, your profit that you're gonna have is gonna be a lot more. Number two, the movement you're gonna make, right, will be a lot more. So what we do is that we always trade Tor and we always put Tor in the day chart, okay, in the day chart, regardless of what instrument. So for example, in equities, we'll put it in the week chart, and in lower time frame, we will trade that in the day. Okay, so that is a prescribed time frame to use. So when you're doing Forex or when you're doing, let's say, commodities, then you will put the Tor in a day and then you trade that in a lower time frame, which is a H1 or H4, like what Alex is doing, because that is also our prescription. Right? But this is to make sure all the time frame are being aligned so that you trade what the bigger guys are using. Just to let you know a little bit of a background, why Tor cannot be found elsewhere in the textbook. It has to do with a lot of programming jobs that I did with over the years with a lot of other people, names that I cannot let you guys know at all because of the NDA, right? Therefore, it incorporates a lot of the components that they are asking us to program in. So in other words, it's a very valuable piece of information where you can see the market differently. Okay, all right. So
Rosalind is asking whether this is suitable for day trading rather than investing. Maybe I can answer also. Okay, so this is not really for day trading. It's not meant to trade in a 1 minute time frame, 5 minute time frame. So it's meant for I would say it's swing trading, mainly hold for a few days to 1 or 2 weeks, and you can use it for investing as well. For example, you want to hold for a few weeks to a few months, then you can look at the higher time frame for the wash and rinse. For example, the weekly time frame or the monthly time frame, you look for the wash and rinse pattern. All right.
I think to add on to this, I would really think that you have to understand the instruments that you're using. So for example, in one of the course I have with SGX Academy, we are using the same method, which is wash and rinse in the 1 hour and we trade intraday. That means, you know, today we enter at the end of 4 o'clock or 5 o'clock, we'll just exit the market already. So it depends on the instrument that you're trading and how much you want to get. So for example, usually, let's say for FX, I'm very, you know, I want to get more. So I'm getting like 100 pips, 200 pips. Therefore, I want to use the higher time frame. But if you are, for example, getting only, let's say, 30 pips or 50 pips, right? Then you want to use a lower time frame to help you. All right. But what Alex said stands in the whole. But I think the very important thing is to make sure you get trained. And that's the reason why we have this promotional training package that I don't offer elsewhere. You know, it's only 6 months, but we are doing the extra lessons plus the extra time for the indicator.
Yep.
Right?
So I think Joe is asking how do we sign up for the 30th March webinar. So I already posted the link in the chat again. So just register for the free Tor indicator for a month trial, and then you can also get to sign up for the 30th March webinar. Am I right to say that, Binni?
Yes. So as I said, just go to the website, put in your name and your email address, and then verify your email address, okay? Yeah. And then follow the instruction. There will be an automated email sent to you. If you don't find it in your mailbox, check your spam, check your promo tab. It will be there, all right?
So in short, you know, you have any question, don't bother first. Just register free for the Tor indicator first, because Binni is going to, you know, conduct this free webinar on the 30th March. Then you can, you know, just go through with her the Zoom webinar and ask her, answer any question, ask any question. You can answer through that webinar as well. So you cannot see the link. I already posted the link in the chat. Can you see the link? Get your free alien wash indicator, right? Everybody should be able to see the link, right? Yes. All right, so thank you once again, Binni, for your wonderful session. Right now, we are already at 2:20. We are heading off to the next session. Jeremiah, are you there?
Yep. Can you hear me?
Yep, I can hear you.
All right.
Hold on, Binni. I think some are saying the landing page is not active.
Let me just post in. It should be active.
It's active. I tried on my side. It is correct also. How come it's showing different thing to the people?
Correct.
Is it tor.onlineforexmaster.com/free-tor4?
Yeah, correct. Tor, this is the one which is a short link. This one.
Yeah, I know. I post the direct link in the chat.
Yeah, that's the correct link. Yes.
Yes, that's the chat box. I just keep spamming. I don't know. Some people just cannot see or whatever. So I just post again. All right, you guys should see, because on my side I tried again. The link is working. Okay. Yep. Again, how to register for webinar? Just put your name and email address in the form. All right. Standard. Then Binni will send you more information. All right. So we are running short of time. Jeremiah, back to you again.
Thank you so much. Thank you so much, Alex. And thank you so much, Binni. I think, first of all, thank you, Binni, for taking your time out for the session. I really want to thank you for that. I think looking at the comments, they all have some positive feedback. And I think we all managed to learn something. It is now 2:22. Our next session is at 2:30. And we have Terence, who is the founder of Impossible Investors, who will be covering his session on explosive one-day earnings strategy with stock options. So that's going to be happening and starting sharp at 2:30. So it will be a different Zoom link. I think Alex just shared the Zoom link for the next session in the chat. So be sure to join that Zoom link. This Zoom room we will be closing. Please don't stay here. And I'll see you at the next Zoom link. Alex, anything to add?
Nothing. So again, just go ahead and register for this 1-month trial. All right. So it's cost you nothing. Just register for it, because personally, I'm using this thought indicator as well. I'm using it. I think it works very good. Works perfectly. All right. So yeah, I will see you guys in the next room in 5 minutes time. See you guys later. Okay. Thank you, Binni, for our session.
Bye bye.
We'll end the room. We'll end the session right now. Bye bye.
All right. Thank you. Bye.
Bye bye.